Welcome to this presentation of What You Must Include in Every Trade Signal, Part 1. This is a Specialist Trading Weekly Stock, E-mini, and Forex lesson. Well, hello everyone and welcome. My name is Stephen Primo. I am the president and founder of Specialist Trading. And in this week's presentation, I'll tell you what you must include in each and every trade signal that you get, regardless of what time frame, and regardless of what market, and regardless of which direction you are trading. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using what these components are in your trading signals. But please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's stock, E-mini, and Forex lesson. Okay, the reason why I want to stress what you must include in each and every trade signal is because there are too many traders that are unsuccessful right off the bat. In other words, they have a specific amount of money in which they want to trade with, and it's been estimated that upwards of 80 to even 85% of all traders within the first year lose everything that they've saved or accumulated for trading. So we want to get you on the right track, and we want you to be successful. That's why we offer you these free education webinars. But the thing is that most people have a different idea of what success is. In fact, when I first started trading, my idea of success was to see how much money you could make. And I know a lot of traders think, well, my idea of success is to generate enough capital each month so I can sustain and support myself. Well, over my 36 years of trading, my idea of success has drastically changed. And what success in trading is now, in my opinion, is consistency. What you want to have is consistency in your trading, meaning you have 2 steps forward, 1 step back. We're always going to have some losers within our trading. There's always going to be some small drawdowns or losses. But we want this consistency to know that we can rely on our method, on our strategy, so that we can always come back another day. There are plenty of traders who made hundreds of thousands, if not millions of dollars in a short amount of time and then gave it all back. So that meaning of success, to see how much money you made, is really not valid. What really is valid and what stands the test of time is having a sound method, strategy, methodology that will keep you consistent in trading the markets so that you can be trading 10, 20, 30, even 40 years down the road. That's really the name of the game. As long as you can continue trading, you are successful. In other words, we don't want to blow out your entire account within the first 6 months to a year of trading. And in my 36 years, I found the way to get consistent is what my mentors taught me. And they said, if you keep things as simple as possible, Steve, if you don't complicate your trading, you will eventually get on that road to consistency. So this is what we try to instill in all of our members, is that simplicity equals consistency. So I know a lot of traders try to be consistent in the trading. They just can't seem to do it. It's because your trading is too overcomplicated. You've made it too complicated, and there's just no way it can get on that path to consistency. So remember, regardless if you're trading one of my strategies, one of your own, or something from another educator, keep it as simple as possible, possibly anywhere from 3 to 5 rules without looking at a ton of indicators, without relying too much on outside sources such as news or trading rooms or chat rooms, just focusing on the chart in front of you. All right, so let's talk about this week's presentation. Here's what should be included in every trade signal. This is regardless if you're trading the Forex markets, regardless if you're trading the E-mini on a 5-minute time frame, or regardless if you're looking at weekly or even monthly stock charts, okay? What you must include if you want to see a buy signal, you must include that price is above the 50-period simple moving average, all right? This is a must. We have to see that we are in sync with the trend, and the best way to do this is by seeing that price is above the 50-period simple moving average. You must also include that price declines or consolidates near that 50-period simple moving average. So we want to see price kind of sell off. This is also called a pullback. And then finally, what must be included is that a price bar closes in the top 25% of its range. This should be your setup bar, the bar that tells you time to get in. It should close in the top 25%. All right, what if we're going short? Regardless of market, regardless of time frame, you must include for sells that price is below the 50-period simple moving average. Once again, we want to be in sync with the trend. The easiest and best way we know how to do this is by looking for any tradable market that is below the 50-period simple moving average. You must include that price rises or consolidates near the 50-period simple moving average. So now we want to see a little bounce in price or a little rise that is going in the direction bouncing back up towards the 50-period simple moving average. This is also a pullback in an upward direction. And then lastly, you must include that a price bar closes in the bottom 25% of its range. Okay, just now this is telling us that most likely this is a high percentage setup bar, and this is giving you a great clue as to time to get into the actual trade. All right, so let's look at some markets here, some recent past signals, and we'll show you exactly how these were all included in 3 different separate strategies that we incorporate here at Specialist Trading. First of all, we're looking at a chart of Facebook. These are daily bars, and as we see here in the beginning, the first 2 signals of this trade, we were above the 50-period simple moving average. So this was telling us that we're only going to be looking for long setups. Now we see here that price sold off, as we instructed for rule number 2, price sold off towards the 50-period simple moving average. And then right here, this was our setup bar because it met all of the rules of the requirements of the strategy, but at the same time, it closed in the top 25% of its range. So this was all the rules and everything had come together. These 3 components I talked about had come together, and look what happened to the stock. It went straight up. Now we have another sell-off. We're still above the 50-period simple moving average. We have another sell-off towards the 50-period simple moving average. We have all the makings in the environment for another buy signal, but we're waiting for our bar to close in its top 25%, which it did right here. And then we had another nice move to the upside, which would have shown us a nice smaller profit, but still we had a profit on the trade. Now price sold off. Price began to sell off, and as you can see, as it's selling off, someone would say, well, I guess we're looking to go long again, but we never found that bar that closed in the top 25% of its range. So therefore, we never actually got long. But look what happened. Now price is consistently below the 50-period simple moving average. So what does this tell us? This means we're only going to be looking to go short. All right, so that's rule number 1. Rule number 2 is we want to look for price to bounce now towards the 50-period simple moving average, which it does. As you can see, price bounces in its upward range here. And now we simply look for a price bar that closed in the bottom 25%, of which it did right here. And as you can see, we had a nice sell-off. So 3 profitable signals using a specific strategy that we incorporate here at Specialist Trading, that if our members were trading this particular stock, Facebook, they would have had 3 winners in a row. All right, what if you're a day trader? What if you like to look at intraday charts of the E-mini? Well, same concepts apply. These are the things that you must include in each and every trade signal, regardless of what strategy you're using. Now, the majority of price is below the 50-period simple moving average on this 5-minute chart of the E-mini. All right, so price is below, and now we're looking to see the second component, meaning we want a little bounce towards that 50-period simple moving average, which is right here. We begin to bounce, and then we finally find a bar that closes in the bottom 25% of its range that meets all of the other rules of the strategy, which is right here. So this told us to go short, and look what happened. Very nice move to the downside. You see how these components, how these requirements work in every time frame in every market. Now let's transfer this over onto the dollar-yen, the Forex markets. It's safe to say that we've been well above this 50-period simple moving average for a long, long time. All right. What if we had any type of advanced warning to get long the dollar-yen so we could have taken advantage of this really nice run-up? Well, as we see here, we had not a sell-off, but a consolidation. Remember we said either some type of sell-off towards the 50-period simple moving average or a consolidation in price, which basically just means a kind of a rangy move, kind of up and down, or more of a consolidation, kind of a spring, kind of waiting to get unwound. So as we see here, we really didn't sell off towards that 50-period simple moving average, but we consolidated, and here is the bar that closed in the top 25%. In fact, this bar actually closed at its high. So this met all of the rules, all the requirements for a particular strategy that trades the Forex markets that told all of our members to get long. And you could have gotten long the dollar-yen as early as the beginning of December and made, if you stayed and within the trade and traded aggressively, over 1,600 pips. That would have been close to $16,000 per one lot traded. All right, so let's review. Remember, we're talking about what must be included in each and every strategy, regardless if it's one of mine or regardless if it's something you came up with or something from another educator. Remember, for buys, you must include that price is above the 50-period simple moving average. Price must also now decline or at least consolidate, kind of go in a sideways rangy movement towards the 50-period or near the 50-period simple moving average. And then lastly, Once you find these requirements met, then you want to look for a bar that closes in the top 25% of its range. This is a tremendous signal that the market is getting ready to go in that direction, towards its upward direction. If you're looking for sell signals, what you must include in those sell signals is that price is below the 50-period simple moving average. This distinguishes now that you're in somewhat of a downtrend. You must also include that price rises now. We have a pullback to the upside. It either rises or at least consolidates near the 50-period simple moving average. And then lastly, you want to include that a bar is closing in its bottom 25% of its range. So if you found a bar and you divided it up into four equal but separate units, you would find that we close either in the very low or at least in the bottom 25% of its range. This is the market giving you a tremendous clue that it's most likely going to continue heading in that direction. Remember, we're looking for success in our trading. How do we define success at specialist trading? Success is consistency. So if you want to be on that road to consistency, if you want to be successful in your trading, the road to success is paved in simplicity. Keep things as simple as possible. When I was trading on the floor, I had a very difficult time my first year of trading. A lot of people think that because you're a specialist, because you're a floor trader on the floor, you have a license to steal. Well, I know myself as well as a number of other traders had a very difficult time. We couldn't seem to get ends meet. As soon as I changed my mindset to let go of all the things I had been taught that were going to make me successful, as soon as I let go of those things and just relied on listening to the market and keeping my strategy as simple as possible, that's when I started to get on that road to success or to consistency in my trading. Why? Because I kept things simple. Okay, so let's conclude now here. This is the end of our weekly stock, E-mini, and Forex lesson where we talked about what you must include in every trade signal. Remember, if you are a member of Specialist Trading, we always instruct you to learn the strategy first, and the best way to do this is by paper trading. We have an array of strategies here, anywhere from upwards of 10 in each specific course, which deals with different ways to trade that specific market. But the only way you're going to gain that consistency is by learning the strategy like the back of your hand and then paper trading it. We don't just want you to jump in and start trading the minute you figured out what the rules are. Paper trade it a while so that you can see how the method unfolds in real time. Okay? Our edge here, once again, is consistency. That's what we're trying to teach you, and that's what we're trying to instill in all of our members at Specialist Trading. In closing, I ask that you take one last look at our disclaimer. I showed you some performance results showing you what you must include in each and every trade signal, but please remember that we can in no way guarantee that any of these results will be repeated in the future. Once again, thank you so much for attending this webinar. We hope it elevates you to the next level and brings you this level of consistency in your trading. We'll see you next time. Bye-bye.